Live streaming is on.
All right, we'll be starting in about 3 minutes. Just hang tight, everyone. We'll be ready in 3 minutes. All right, we're going to go ahead and get started today. Let's bring this up, bring our camera up. Perfect. All right, excellent. Welcome, everybody. Today is Thursday. We're excited to get going with this call. I'm your host, Dr. Josh Lee, and I'll be leading things out today. Excited to be with you, excited for this week. It's been a fantastic week. Trading has been great. Reading the charts has been great. And you know what? I just have a deep passion for what we are doing here. And I hope to really transmit that passion to each and every one of you, because I know that trading can be a struggle. That's a reality. Sometimes when we're getting into trading and we're new, it feels like there's just so much information that there is to be found. And a lot of times that can feel discouraging. And so my hope is to be able to provide you with all of that complex information, but more in a simplified, applicable way that you can actually take and go and make some money with. That's the whole goal of this. And so with that, I'm actually going to share my screen with you. We'll get right into this. We've got some great things to share with you today. And let me do this. All right, perfect. Let's get it right in. So we do want to remind everybody just real quick. So as we get into the tail end of the week, make sure that you submit your information for the flyers. If you'd like to be featured on either Club 50 or Club 100, that is for individuals who have done at least 50 trades in a row or 100 trades in a row or more, and have a 70% win rate or better. Make sure and submit that information to jbboyd25@gmail.com. Your full name, clear picture of yourself. We want you to look great on the flyers, and as well as your wins, losses, win rate, and then proof of your trades. We do verify all of the trades and make sure that they're all legitimate and so forth. And so please make sure and submit that information, and we will love to feature you on those weekly flyers. The reason why we do those flyers is two-part. One is to recognize you. We want to congratulate you for the effort that you're making. These are kind of like rank up flyers for people who are trading, right? There's the flyers for individuals who go platinum or go chairman, etc. But for individuals who are really mastering the skill of trading, this is a way for them to get recognized as well. And we also want to create belief. When other people see you on those flyers and they say, hey, you know what? I'm kind of like that person. I relate to them. And they feel like they can do it too. All of a sudden, what you've done is you've given the gift of belief. They now believe that they too can do this, and you're providing hope and an essence of perseverance, et cetera, for those people so that they can continue on and ultimately lead to their own level of success. And so anyway, with that, let's get into talking about mindset, and we'll get right into talking about the markets as well. Now, yesterday, for some reason, Go Live didn't record our session. I apologize for that. We essentially talked about these 6 pillars of success. We have talked about these in the past. And so if for some reason you wanted to review that, but because that recording is not there, just know that you can go back into the search field of the Go Live channel and actually go to Pillars of Success, and it will bring up previous recordings where we've talked about these concepts before. Very critical and important things to help you on your journey to success. All right, so this thought I wanted to share with you today from John C. Maxwell. This man is the master of leadership. A very expert leadership trainer throughout the world, has taught literally tens of millions of people, sold tens of millions of books. I think he's written even close to 100 books, like over 80, something like that. A very wise sage for sure in the world of leadership. But he says this: life is a matter of choices, and every choice you make makes you. You see, oftentimes we can feel like our life is more of a matter of circumstance. If the family that we're born into, the financial situation that we may be in, the crisis that we happen to fall into. People may experience a natural disaster. Other individuals may be in the midst of a war in certain countries. Others may be in an abusive home. Others may be at school and they get some horrible thing happens to them there. And so we develop a belief that no, who I am is a matter of the circumstances or the things that are around me rather than the choices that I'm making myself. And there's no question that we're influenced and we're impacted by those external things that can happen in our life. But really, when it comes down to it, the majority of what we become in life has really very little to do with those things and has more to do with the choices we make in response to those things. Okay. And so a secondary thought for you on that line is this: the choices we make create the path we take. A simple example: almost every single one of us, I guarantee it, at some point in your life, you've probably felt offended by somebody. Maybe it was a good friend who betrayed you, who lied about you, who did some gossiping or something and really hurt your feelings. Maybe they said something online or whatever. In either case, you got offended, right? Or they did something offensive to you. Well, at that point, you have a decision to make. In a sense, a choice. And that is going to determine the path you take forward. Now, we can essentially opt to forgive that individual, move forward with healing, or we can choose to hold on to that pain, that hurt. They did me wrong. They said this, and boy, I'm never going to forget it, and I'm never going to let them forget it. In fact, I'm going to tell everybody I know about this. I'm going to repeat it over and over and over again until they're hammered and they pay for what they did to me. And so those two paths, and this is just one example, but those two paths illustrate a certain outcome in your life. And not only are just you choosing to do different things, but it really begins to shape and impact how you feel as a person, how you feel about the world around you. Are you complaining? Are you constantly festering and feeling bitter about what happened, that event back in 1982 or whatever it may have been? Or have you forgiven, moved on, and ultimately become freed from that? And now you're able to choose to become really whatever you want to become in life. The world is full of this kind of thing. We can hold on to trade losses that we have experienced. We can hold on to a person who left our business. We can hold on to a marriage that didn't work out. We can hold on to a business opportunity that didn't work out. There are many different things in our life that can hold us down and seek to hold us down at least. And we have a choice to make. And the path we end up taking in life will be the direct result of those choices. And so my encouragement to you today is that you do have a choice. You can actually choose your destiny. You don't have to allow those negative things that happen in your life, whether it be somebody who's offended you, somebody who's betrayed you, somebody who's stole money from you. I mean, we hear about these kind of things all the time. We get notified, people say, oh man, there's this new Instagram channel that some fraudster created and they've been stealing money. And I sent them some money and I've lost that money. That person has a choice to make of, well, how am I going to let that affect me the rest of my life? I know individuals who have had horrible things happen to them. They've been raped, pillaged, all those kind of things. And ultimately, they have a decision to make. Are they going to hold on to those things? Now you say, well, that's pretty bad. They have to deal with those things. And certainly therapy, and there are many different things to help them work through and process the emotional hurt that they have experienced. I'm not belittling that at all. But ultimately, we have a choice to make on what we will become as a result of those things, or independent in spite of those negative things that happen in our life. And this is very important when it comes to our trading, because as we talked about yesterday, as we were going over those 6 pillars of trade success, when we're talking about our fears, the euphoria, experiencing losses, how to know when to take a loss, all of those kind of situations, we have a decision to make. How will we respond? If you experience a loss, how do we respond? Do we get angry? Do we revenge trade? Do we just throw in the towel on risk management? We just attack the markets as if the market cares? Or do we stick back to our rules, exercise consistent risk management, and move forward knowing that the market wasn't out to get us? It just did what it did. We happen to lose a trade. Guess what? No big deal. When you walk down the road, if you stumble over a separation in the cement, do you say, you know what, I'm never going to walk again because I tripped and stumbled? No, not at all. You just keep moving forward and you say, man, somebody's got to fix that little crack in the cement. But you don't let it ruin the rest of your day, the rest of your life. And similarly in trading, sometimes people will allow a single loss to really damage their emotions and their ability to move forward. And so my encouragement to you today is, again, you have a choice that will determine the path you take in your future. And those choices are critical. We make them every single day. You know that every single week, with almost without exception, Brandon and I experience some losses in the market. Now, sometimes because we're focused on teaching and people don't often see us on the trading side in a live session, they sort of forget the fact that we sometimes take losses too. And so they kind of take for granted that we have to face the losses just like everybody else. And so what I would suggest to you is that everybody takes losses in all areas of their life. I've experienced losses with family members, loss of loved ones, loss of money, loss of opportunity, loss of sleep, loss of, all sorts of different things in life. With all those different losses, we have a very critical choice to make on how we will respond. Are we going to move forward and become stronger, or are we going to let it defeat us? I'll never forget the time my 5th child, a beautiful little girl named Sophia, she developed cancer in her brain, had this large tumor. She ended up dying a week later after we discovered it. She was about 7 weeks old, ended up dying at about 8 weeks. And I remember talking to my wife. Here we were sitting in the hospital feeling helpless, hopeless, not even knowing what to do, knowing there was really nothing we could do. All the doctors, everybody had said, there's nothing we could do. And so in that helpless situation, we had a critical choice to make. This path forward, are we going to become hurt, permanently bitter, resentful of life? Why could God do this to us? How could we lose our child? This is so unfair. She didn't do anything wrong. Why did this happen to me? right? These are all normal questions that we often ask ourselves anytime we really face trials, whether it's a loss in trading or whether it's something as significant as loss of a loved one. And in each of those situations, we have a singular question to ask ourselves. And that is, will we allow this loss to defeat us or destroy us, or will we become stronger as a result? And my wife and I, we made the critical decision at that point that we were going to allow that experience to make us stronger. And so what it provided to us since that time, it's been a number of years now since that time, since that whole thing occurred. And we've been able to since increase in our empathy and understanding of other people, the losses that they have experienced, and provide that empathy and that support and kind of comfort to other people as maybe they're experiencing their version of that kind of a loss. And so each of these things can make us a better person, can make us more relatable, can make us wiser even. They can bring wisdom to us. Everything that we teach in this Master the Skill training course has come as a result of practice and making mistakes. When we see these charts and we're seeing price go up and down, the decision of is price going to go up or down? Well, how do we know? Everything, almost literally everything that I teach in this course has come as a result of trial and error and learning from experts and applying these things and trying to develop a level of trading wisdom to be able to discern the markets and understand these things. And in other words, in order to essentially take those hard experiences, the losses, and allow it to make me stronger, allow it to make me wiser than I was before. And so my encouragement to each one of you is to do the same. As you practice, as you stumble, as you make mistakes, and you're going to experience losses, make sure that, first of all, you've got good risk management. Don't risk too much. Make sure that you're managing your schedule well. Make sure that you're managing your fear type, your euphoria, your losses. Know when to take a loss, when to move on. Don't get so married to a loss that you can't let go. I shared with another team, we did a separate call yesterday with a team in the UK. And as we were talking with them, I shared, just kind of a brief story about one of the biggest losses that I've ever experienced as a trader. It was early on, about, I think roughly 3-4 years ago. And as I was placing this trade, it was a big trade. I wasn't exercising good risk management. And it was on the normal Forex side. So we had to use stop losses and things like that. And I didn't know how to use them properly yet. And I let it get ugly. And the price just kept going and going and going in the wrong direction. And so at that point, admittedly, I was just holding on to hope. I'm like, oh man, I hope this comes back. And so as time went on, I eventually, after days, literally days of time, being in this trade, I finally cut my losses and got out of the trade. And what I learned from that experience, though, was these kind of principles. So again, the point isn't that I took a loss. Everybody takes losses all the time. But it's, what do we learn from those experiences? Are we becoming wiser, or are we doomed to repeat the bad choices of the past? And so I made a very distinct decision at that point. I lost a lot of money on that trade. And so I had to make the decision, okay, how do I manage risk? And so I developed a system for risk management. I said, you know what, I'm not going to risk more than 1% to 3% of my account at any given time. And most of the time, for me personally, I usually risk about 1% per trade. Okay. And so having that kind of decision, learning from those experiences, helps us become more of a master trader, somebody who's able to manage their risk, manage their decision-making process, so that we can create that consistency. I guarantee each and every one of you want that daily consistency in your trading, but you need to learn how to apply these principles, and you need to learn from the mistakes rather than letting them defeat you. And so anyway, as we wrap up this mindset discussion, just know that your choices matter each and every day as you make choices in your life, not just with regards to trading, not just with regards to this business, but that your choices do matter. They impact your future. There's a book written called The Compound Effect. I believe it was by what's his name? Hardy. I forget his first name. But anyway, he ultimately, he wrote a book that talked about the compound effect of life and how all of our small choices that we make ultimately compound into the bigger picture outcome of our lives. And it's each of these small decisions that we make. So they do create the path that we take in life. And so that's kind of the mindset section for today. Now, as we get into talking about the markets, there's a couple of things that I wanted to talk to you about today. And we're going to use a couple different pairs just to illustrate this. We often get to the question of, well, which pair is best to trade? And right now we're looking at gold to the US dollar, which is a pair that I often trade. And this particular pair, you say, well, okay, why have you chosen this versus any other? So there are highly traded pairs in the marketplace, and there are pairs that are less traded in terms of the masses. And that increase in participation on any given pair does create more volume, and it does tend to create a little bit more stability within the given pair. And so even though the basic principles that we teach are universal, generally speaking, I prefer to trade some of the major pairs, whether it be some of the top commodities such as gold. You could trade silver just as easily. I actually trade silver from time to time. Oil is another commodity. I don't trade oil personally, but the reality is you just don't need a bunch of pairs. It's kind of like you say, well, I need a car to drive to work. Well, why don't you drive a truck if you're driving a Toyota or a sedan or something, right? You only need one car to drive to work. You really only need one pair. And so that's the only reasoning. You could trade the euro to US dollar. You'll actually find that it's very consistent with price action principles, all those kind of things as well. Matthew Thayer and Taylor Marks, they really love the US dollar to Japanese yen. It's fantastic. It works great with price action, with reading market structure. It has great consolidation phases. It's got good trending times. All of these pairs can work. You can trade the British pound, GBP to USD, the British pound to US dollar. You could trade that. And so which pair is best to trade? There really isn't a best pair. All of them can work. And so why do we trade one versus the other? It's just, I got to trading gold in particular when I was on the normal Forex side, and I just sort of stuck with it a lot when I was doing HFX. And so it was more a creature of habit, if you will, but really there's no other significant reason as to why to trade it, because you can win just as much on any other pair. That's very important to understand, because the question that people have when they're really saying which pair to trade, they're saying, is there a secret pair that will enable me to win more? And the answer is no. People can win a ton on USD JPY just as much as they can Euro USD, or gold to USD, or GBP to USD, or any other pair. The Swiss franc, I mean, you pick it, it'll definitely work. But what I wanted to talk about today in terms of technical analysis is continuation versus reversal patterns. I also wanted to kind of branch out a little bit and talk about break of structure on two different levels. One is just overall break of structure, and the secondary part to that is break of structure candles, which are particularly useful when we're looking for measuring momentum in any given direction. During strong times of movement, like we even see here just in this recent past, I'll just show you this real quick since we're right here. As we look at some of these breakouts into the upward direction, there are a lot of what we call breakout or break of structure candles. What a break of structure candle is when a new candle closes beyond where the extreme of the previous candle. So if we looked at any given candle, we simply look at the current candle, say, is this going to close beyond the extreme? And let's zoom in and kind of show you a specific of that, and then we'll get back to continuation versus reversal patterns. So let's start with this one right here as we get this little breakout here. All right, so at this moment here, we have what we would call a break of structure candle. Not the red one actually is a break of structure candle to the downside, but when we compare this green one to it is also a break of structure candle, this green one right here. And we call this a break of structure candle because if we put a horizontal line where the wick is at of this red candle, and I recognize it might be a little bit hard for you to see that. I won't let us zoom in any more than we've already done there. And then look at the bottom of the body, okay? And it's the body simply because there is no wick in this particular case. And so if there was a wick, we'd go to the bottom of the wick. But ultimately, this green candle, you'll notice that the body of this closed above the very top of this previous wick of this red candle. So as a result, we refer to that as a break of structure candle. This next candle in line, this next green one, is also a breakup structure candle. Note how it is closed well above the top of this previous green candle. This one did as well. So each of these three green candles are each breakup structure candles. This next one is not, because note how the body of the candle closed slightly above where the price opened. That's why it's a green candle, but it did not close above the wick of this previous candle. So note how it's closed below this level. So we do not consider this to be a breakup structure candle. And so when we're in times of consolidation, oftentimes you will see a lot of non-breakup structure candles. Okay, candles, for example, right here. So where the price is kind of lateralizing temporarily, if we look at each one of these candles, right, this red one did not break the structure of this previous green one. This green candle did not break the structure of this previous red one. It did not close above the top of this wick. It got close, but it did not break it. This red candle did not close below this green candle. This green candle here did not close above this red candle. So each of these is kind of indicative of consolidation. So when we're looking for consolidation phases versus trending times in the market, you can actually use this basic principle of breakup structure candles to identify on a higher level, kind of like our top-down analysis approach, to actually identify consolidation on one time frame, to then drop down in time frame to look for reversal moves. So, for example, this is on the 1 minute chart. Let's delete some of this. Let's just jump up to a 5 minute time frame chart. Let's go to a consolidation time. Let's see. All right, so let's do right here. So here we have some consolidation and non-breakup structure candles. This green one did break the structure of that one, but we'll still look at a few of these. So now that we've identified basically some non-breakup structure candle activity on the M5, if we drop down in a time frame to the M1, just to look at that same time frame, you'll note that if we identify several of these pivot points here, where price was going up and down inside of this lateral channel, you can see that the price is essentially reversing, and it would be in consolidation in this phase. We could also see with a technical indicator such as a Bollinger Band line, go figure, we have price crossing over our middle moving average line. What does that indicate? We're likely in consolidation. So again, if you're doing step one of your objective trade decision process and you're saying, is price in consolidation or not? Look for these different signs. Look for the middle moving average line. Look for breakup structure candles on a higher time frame that might suggest whether or not you're moving into a trending condition or not. But ultimately, that can be useful. So back to our original topic, though, of continuation versus reversal patterns. So a continuation pattern is essentially just a breakout and a retest. We talk about this all the time, and it is very powerful. So anytime you see two pivot points in the marketplace, and then you have a breakout in one given direction, you can look at the previous pivot points and say, all right, I'm waiting for price to come back to that level and then continue in the upward direction. Now, it's not always going to come back to retest. Our ideal location is back down to the previous pivot point, but it doesn't always give it to you. And that's okay. That's part of our overall trade analysis picture and process. But ultimately, it's important to note that that's what you're looking for. And as you do so, then you can begin to kind of weed through some of the price movement activity, some of the noise that it takes place in the marketplace. And you can ultimately kind of really hone in and say, if this happens, this is what I'm going to do. That creates much more solid scenarios for which to follow rather than just jumping in arbitrarily at any given time, right? And a question I think a person asked in the chat earlier was, when you have a breakout and retest, do we want that confirmation candle to be an engulfing candle? Could it be a breakup structure candle? All of those things would help. It's not completely necessary that is the case, but certainly oftentimes if it is an engulfing candle, that just further affirms that there's momentum in that given direction and not necessarily just kind of a consolidation kind of move or whatnot. All right. Okay, so so as we look at price movement here on gold, we can our step one is always, what phase are we in? And so if we look at this recent price activity, and you can see this is where live market activity is at, this is where our live candle is at. And if we look at kind of this previous structure here, on all of this price movement activity, the question is, are we in consolidation or are we in a trending time? One of the ways in which we do this, you could actually just grab literally a line, come to the left side of your screen, drag it to the right, go to where price is at, and say, is price going up or is it going down? Now, it's relatively speaking, this is going up just slightly, but it's definitely not been going up a lot. And you can say, well, why do I choose that point versus something over here? You could choose anything kind of arbitrarily, to that side. The whole point is to choose a group of data and can I get a basic high level view, almost like you're looking at the ground from 30,000 feet. You're looking for a basic direction. Okay, you're not getting real refined yet. This is just basic directional analysis. And so at this point, we're saying price is basically in consolidation. And if we looked at higher time frames, we would likely see a lot of consolidation-like activity. And so from there, though, how do we then continue our analysis process? Well, our step 2 is to confirm this information with technical indicators. As we mentioned the other day, you can add a Bollinger Band tool to your chart, and it provides some additional clarity. You can also add the RSI, which will give you a suggestion of where momentum is at. Now, if we look at the current price movement over here, what do we see? We see that breakout above this previous pivot point. So here's our pivot point there. It broke out above that level, has since retested and moved up. We're clearly above our middle moving average line. So all that information thus far is suggesting upward price movement. The RSI, what is that telling us? We're way above 60%. That suggests upward momentum, further suggesting that price is likely going to continue to move in the upward direction. And so what do we see here? When price came back down to retest this zone, we're getting now some upward momentum. This would have been a perfect trade opportunity, okay? And this is even a good example of engulfing candles versus not. If you look here, technically this is our confirmation candle, this little green one right here. It is not engulfing. It's one of the earliest indications that price was changing directions, though, at that point. And so that would technically be your point of entry on this candle here. So looking at the technical indicators, though, this is suggesting that the momentum is in the upward direction because it's above 60%. That's what the RSI tells us. It is a momentum oscillator. And the fact that price is above our middle moving average line, again, from the other day, what did we say? That price is generally moving in an upward direction when price is above the middle moving average line of the Bollinger Band. If it's below, price is said to be moving downward. So those can be used just as general guidelines. If price is underneath the middle moving average line, it's likely moving down. If it's above the middle moving average line, it's likely moving up. So you use that as kind of your starting point to say, okay, is price above or below that middle moving average line? Price doesn't usually cross over and then just immediately come back. Sometimes it does, but it usually doesn't. And so if you see price is above, look for call option opportunities. If it's below, look for put option opportunities. And look for momentum to further validate that opportunity. So up here, where price is really moving in this strong uptrend right now on gold, this is further validated by the fact that the RSI is well above 60%. So this is suggesting to us that, hey, there's a lot of upward momentum. We want to be looking for call options, that their price is really on the move. You compare that to this previous price activity here, even through some of these kind of smaller downtrend moves and then some consolidation, what were we seeing on the RSI? We had a few peaks above 60%, but really the majority of the time it's between 60 and 40%. We had a short amount of time on this breakout to the downside here where the RSI was below 40%. So we could have looked for some put options during that time, okay, so during this phase here. And so using these technical indicators as step 2 in our objective trade decision process helps us to have that confidence that yes, indeed, we are in consolidation, or yes, indeed, we are in a trending time. And that can help to frame your mindset to where you're looking for a certain directional bias. If you're in consolidation, you're expecting price to reverse off of a previous pivot point. If you're in a trending condition, like we're up here on the right side over here, Okay, then we're expecting price to do what? Mainly go in the upward direction. We want to favor call options. We don't want to place a put option here and then have price go against you repeatedly. And so, anyway, as you apply these different technical indicators, it can dramatically help to improve the accuracy and win rate of your overall trading strategy, because you are more in tune with what the market is actually telling you rather than just going off of your gut instinct, your intuition, even your experience. I have a lot of experience, literally thousands of hours in the market, and I've got pretty good intuition. I could look at the chart at any given time and I could say, okay, here's what I think is going on. But even then, I'm often surprised at how often, once I add a few technical indicators, it provides that additional confirmation validation of things that price alone, being these candlesticks, cannot show you. Okay, we cannot always see momentum through the candles by themselves. Yes, we can see breakup structure candles. These three, for example, were all breakup structure candles. Okay, and each time we have these big impulsive moves, we start to get these breakup structure candles repeatedly. And and so those can be part of the picture, but they're typically not the whole picture. But it is part of what you can certainly follow. Now, when you have strong momentum, kind of like you're seeing here on the right side, one of the trade strategies that I enjoy following is if the price is well above our middle moving average line, and if we can see really strong momentum, as we see in this example, one of the things that you can do to take more trades is actually to look for a confirmation candle after a retracement. So you see we've got 4 red candles here. We have a green candle, so that would be a confirmation candle after prices retrace. So what that's telling us is that this green candle is showing us that, hey, price is moving in the upward direction, and so we can take that trade. We want to trade with momentum. If we took that trade for 3 candles, 1, 2, 3, price would close at the top of this candle here, and we would win that trade. Here's another short retracement, still very high momentum during that time, and then we get a confirmation candle at this green candle here. So I'll put an arrow on a few of these. And here's yet another one, red candle retracement, green candle continuation move. Red candle retracement, green candle retrace or continuation. That's our confirmation candle. This little red doji, you could potentially even consider that as an option. Let's put a green one just for the sake of going through this exercise. And then this one here. So price has come down. We still have some strong momentum. We get our green candle. So if we just followed each one of these during this time of a very high, strong momentum, let's see how this would have played out. This first one would have 1, it appears. Okay, again, 1, 2, 3, price closes above our call option, so we win the trade. Retracement, confirmation candle. So we would enter at the close of this green candle here. 1, 2, 3, price closes up at this level here. We win the trade. This retracement candle here, confirmation candle, that's 1 green candle in the direction of the trend. We have a strong upward momentum, so everything is in line. We're way above our middle moving average line. That's suggesting that we've got some good, strong upward momentum. So we take that trade. 1, 2, 3, price closes at the close of this candle, and we win that trade. Here's yet another. 1, 2, 3, we win that trade. And on this last, this one here, we would enter at this candle here. 1, 2, 3, that one would lose. So we have 1 loss so far. This green candle here, we have our red candles. This is our retracement. Green candle, we're still strong momentum. Take that trade for 3 candles. 1, 2, 3, price closes up here, and we would win the trade. And you could even see this one live. Let's see how this one plays out here in the next 40 seconds. So this candle here is that same thing. We've got strong upward momentum. The entry would have been at the close of this candle, 1, 2, and let's wait literally these next 30 seconds to see if this candle or this trade would win. So if it closes above this red line, then that trade would have won. And so far we're 1, 2, 3, 4, 5, and 1. 5 and 1 on that. Okay. And so in about 16, 15 seconds here, this candle will either close above or below this green candle here, this red line that we've drawn, and we'll determine if we win this trade. So here's our 5, 4, 3, 2, 1. Boom, you win the trade. Okay, so now we're 6 and 1. How does the math play out on that? If you look at the simple math, we ended up with 6 and 1 just on this little short-term uptrend right here. And you just saw that one win right before your eyes. So that would have been a perfectly valid trade opportunity. So right there, in fact, you got another one right here. Okay. So 6 and 1, how that plays out is we have 6 wins essentially. And let's just choose an arbitrary number. Let's just say our trades are $100. And so you're let's just pick a 70% profit payout. And that means you're going to win $420 gross profit. Okay. We had one loss at $100. Okay. And you lose that whole amount. And so we have basically $420 gross profit. We have $100 gross loss. So what does that make our net profit? You just take the 420 minus the 100, and we have a net profit of $320. Okay, so on say a $10,000 account, if you're risking 1% of your account at $100 per trade, then you would be up 3.2%. Okay, 3.2%. In just a few trades. How many minutes did that even take? So once we see that the market is trending up, we take each of those trades. You got another one here that's probably going to win. But just even in that amount of time, let's take our time tool here. So here's our first opportunity. We go to the last opportunity here. And when that closed at this point here, that took 27 minutes. 7 trades, 6 wins, 1 loss, which from a percentage win rate, 6 divided by 7. So that's an 86% win rate. So when you see people on the flyers and they're getting that 70% win rate, 80%, 90% win rate, that this is how a lot of them are doing it, is through these kind of strategies. By following simple market principles, it's not impossible to get that 70, 80, 90% win rate. By simply reading the technical analysis clearly, looking for the, for the chart to tell you essentially when you're in strong trending times or not. And it's very important to understand, it's not just about price being above this middle moving average line. Because note how here we don't have the same level of momentum. So if we took those same trades right here on this confirmation candle, 1, 2, 3, that one would have won. If we took this one, 1, 2, 3, this one would have lost. This one would have lost. This one would have lost. And so taking all of these trades right here, those same confirmation candle based approach, almost all of these would have lost, except for this first one. Why is that? Because it's not coupled with momentum. We need momentum to be on our side. Okay, so this candle just closed, so that would make another win. Because this is another confirmation candle. Let's draw that in right here, just so you guys know which one I'm talking about. So at this point right here, that was another confirmation candle. This one right here, retracement, confirmation candle, strong momentum, well above 60%. And so we get 1, 2, 3 prices above our entry there, and we would win that trade. So that would make it 7 and 1, which would increase the win rate even more. 7 divided by 8. So you're at 87, 88% win rate. People, I don't know how to even make it any more simple than the principles we teach. Everything that we teach is repeatable, duplicatable, and you can win with this. All right. By simply following the principles that we teach. These work for all market conditions. And when we say all market conditions, do you have to identify phase? Absolutely, you do. But that's part of the analysis process. And you say, well, what do we do if I was looking for trending time? And let's just say, for example, that I was watching kind of in here. And I say, I don't see these kind of, nice trending condition opportunities during this phase. And that's true. And that's okay. You may not always have those conditions, because what do we see on the momentum? Well, during that time, we really didn't have any good momentum here. It's all between the 40 and 60 line. This black plot line is oscillating up and down between the 40 and 60%, which means this is largely consolidation activity. There's not a lot of directional momentum. And so those are not the time to apply the trade strategy that I just showed you right there. Okay, here was yet another opportunity right there. This is another confirmation candle, this one. Okay, and as you can see, price is moving up beautifully. Why is it doing that? Why would this be a good opportunity? Look at the momentum. Well above 60%. It's beautiful. So a couple of little secrets, if you will, and tips that will help you to take advantage of these times. There are certain times a day where you're typically going to see stronger movement than other times. Now, that's not to suggest that you never see trending conditions at other times other than this, but I want to just kind of highlight and bring to your attention and awareness some of these times where you do typically see some strong movement. So first and foremost, right around when the market opens. And so that's going to be right around here. All right, so at this blue line, this is at the opening of the New York session. It doesn't guarantee that you're going to have strong movement, but that is often when it is. So those first 2 hours of market movement up until about this point here, and then usually right around 11 o'clock, which would be about 1 p.m. Eastern Standard Time, that's when you're going to start to see some additional movement. Through lunchtime, you often get some really good directional trending movement, especially on gold. Euro USD, I know, does it a lot. And so really I guess the short answer is the first 2 hours of any market session, Asian, London, usually you're going to get some good movement. If we went back in time a little bit, let's come right to here, for example, right about there is the beginning of the London session. And even if we get rid of some of these drawings, just so you can see just the price, if London session is right at that point, and this is where we start to really get some strong directional movement. Okay, right at about this point here was the opening of the New York session. It was a little bit more consolidation like today, and that's okay. That happens sometimes. So don't place your trades arbitrarily based on a time of day, but simply looking for price to move based on that time of day might give you a clue as to opportune times if you're looking for this strong movement opportunities like we just saw here on gold. Literally, I think that would have made it 8 and 1. Okay, so that right there, that's your near 90% win rate following one single strategy that's super easy to see. Okay, you see it right here. Look at the momentum. Price is well above the middle moving average line. Those are the only two things we're even looking at. And then just simply waiting for market to retrace. It may be 2 candles, it may be 1 candle, whatever. And literally 8 and 1. This one, I think, what was it? This one was the only one that lost, and that's barely a retracement because it's like this little red line doji. Okay, but we're taking it just to show you if you took literally every single one, even during prime conditions, you're going to win a lot of those trades. And so you'd see the same thing here when you got some good downward momentum. If we went through these, you're likely going to have a lot of wins as well. Okay, so point is that identifying market phase, looking for specific patterns, whether it's retracements, confirmation candles, looking for strong momentum. Make sure momentum is on your side. It's always helpful. Because we need price to move in a specific direction, then logic would suggest that it's important to then have momentum on our side and to trade during times where we're seeing that strong momentum. That'd be very, very useful to you. All right, so is this trend going to go on forever? No, it won't, but what will we see? We're typically going to see some kind of strong move to the downside. If we start to see price pushing below the middle moving average line, or if we see the black momentum line starting to push into the 40 and 60, that's where you stop doing this strategy that I just showed you. All right. And so, but I'm happy that happened literally right in front of your eyes, because this is one of my favorite little strategies to implement in the market. It's very simple, very straightforward, and anybody can do it. And it's very concrete. You'll notice that we know exactly where we're taking the trade, and we know exactly where the trade ends. So everything is confirmed in advance, and it works beautifully. All right. And don't overdo it. You don't want to just keep taking trade after trade after trade, because eventually the losses will come. You'll come into these consolidation phases where you maybe get a couple losses in a row. But just so make sure the momentum is on your side and not in the consolidation like pattern. All right. So, and typically, after you take a loss like this one right here, if you took this one, if you consider this a retracement doji here, and then you took this one will probably end up being a loss. It's got, this candle right here, once this closes in about 15 seconds, that would determine whether that trade loses, and it will likely lose because it's not above this line here. All right. So they don't go on forever. Recognize that market phase changes constantly. So in addition to that, I want to talk a minute just about reversal patterns. So when we're looking at the market, we've often talked about divergence and different things. And I wanted to show you something just even over here on Bitcoin. A lot of people are trading this right now. And we actually have a little bit of a reversal pattern on Bitcoin. So I was actually in a buy earlier on Bitcoin, expecting price to go up. But then I just closed it out right around 40,000. This was on the normal Forex market side. But why did I do that? Why did I close out that trade? And the answer is because of this divergence phenomenon. So we taught you before that divergence is essentially when you see a reduction in momentum, and on a triple peak, it's between three specific peaks. So I'm looking at this peak here, right there, and then right here, okay? So these three price peaks, with the middle peak being the longest of the three. And so you'll note from a price standpoint, it appears that price is moving upward, but the first clue that the divergence is beginning to form is that we see an actual reduction in momentum down here. In other words, the momentum measure is lower than at the first peak, even though the price is higher. So as price pushes down, and then it comes back up very close to this first peak, that is the sign where the market will likely turn around and go in the downward direction. So this triple peak divergence setup was the reason why I exited. Now, this is normally a very good put option trade opportunity. So right here, you would actually look for a put option in this case right here. Let's get an arrow. Okay, on this candle here. So this red one here is our confirmation candle for that specific strategy. And so our entry would be literally at the close of this candle for 3 candles. Now, the expectation is that it's going to go in the downward direction. And this is a 1-hour time frame chart, so this particular setup is going to take some time to play out. But the point is, and what I wanted to illustrate to you, is that by simply identifying repeatable patterns in the market, we are in fact able to make future price direction predictions. And so, but we have to be aware of them. Why does this triple peak divergence play out? Because essentially, just like we just saw on that nice upward trend, when we see a reduction in momentum at these 3 points, so the first one was high, second one was not as high, and then the third one typically is right around that 60% level. All of a sudden, it's saying, you know what? I've tried to go up a third time and my momentum just got killed. And so that's where we typically see price really reverse. We had a triple peak up here, okay, between those three. There you go. And this happens all the time on many different time frames in the market. You could look at the daily time frame, hourly, weekly. It really doesn't matter what, and you'll see these different patterns. We had one here. In fact, I'll show you on the daily on that one. Okay, this was a perfect example. So price was moving up. So we got a higher middle peak. Price breaks below this low. That's picture perfect. Comes back up. That same zone as the middle, as the first peak here. And that's where we're expecting price to go down. Now, that is further affirmed, though. The divergence can only be seen when you couple it with a momentum oscillator, such as the RSI. Now, this is called a divergence indicator. It's simply an RSI. That's how we use it, just so that you can see the 50%, 40, and 60. And the 40 and 60 is the only customized setting that I use on that. Everything else I just sort of turn off on that. But anyways, so seeing that reduction in momentum, though, is what gave us the clue that price was then going to go in the downward direction. And so we were able to, for anybody that I know, who was in a buy expecting Bitcoin to go up, it's like, no, hey, you want to get out right around 60,000 because it's done for a while, right? And that's where we see the price drop, and it dropped all the way to 30,000. So on a short-term buy that I was in, ultimately I closed out right around 40,000, expecting there to be some further downward move. And that was a short-term trade I was taking. But anyway, point being is that seeing these reversal patterns, seeing the continuation patterns break out a retest, help us to know what the market is going to do in advance. Because let me just kind of paint this picture. So if we go to our little replay tool here, and this is what we saw in the market. As price continues to play out, okay, it comes up here, hits this upper 60,000 range. We're seeing this. We're seeing our triple peak divergence set up. This is really all we have to go on. And so you have to say, okay, well, what is Bitcoin going to do next? Most people who had been riding this nice big upswing were expecting, it's just going to keep going up. But what did it do? Those who were actually reading the technical analysis saw this triple peak forming. For some of you, you might say, it kind of looks like a head and shoulders pattern. It is, but there's a distinct difference between how we actually enter these trades. And this is where we see that triple peak divergence setup forming. And that's where we begin to actually see things start to play out. We see prices continue to blow and everybody else is crapping their pants because they're going, whoa, what just happened to Bitcoin? Oh, Elon Musk must have said something. China must have said something. They start blaming all over the place when in reality, at this moment up here, we already knew that it was about to drop from technical analysis. Had nothing to do with the news. I'll be the first one to tell you, in my opinion, the news doesn't really do much to the market. Okay, I've watched this for thousands and thousands of hours. It really doesn't do much to the market. You'll get some big moves on NFP days, things like that, but most of the time, the news, it's always after the fact. Because what does the news report? Does it prophesy the future? No, they're reporting what already has happened. So they'll see a drop in Bitcoin. They'll look for something in history. They'll say, looks like Elon Musk said something about Bitcoin here. Let's just throw that up there and talk about it. And everybody believes it. They say, it's because of Elon Musk. I can tell you, he doesn't have that much influence over the market. Okay. He's not going to affect all the bankers and tell them to sell. And so anyway, but technical analysis tells us when these things are going to happen. And likely before we get a move to the upside, we're going to get further patterns here before the price then continues to go up. And it would likely be a move or, some kind of divergence pattern, a triple peak divergence. The momentum is very low, below 40% right now on the daily time frame. This is suggesting that price could really continue to push down. Why? Because the momentum is in the downward direction. That's why. So anyway, these principles are universal. Hopefully it's been helpful to you today. Just as a reminder, don't forget to submit your information for the flyers to jbboyd25@gmail.com. We will go ahead and feature you tomorrow. Tomorrow at 2 p.m. Eastern Standard Time is when we kind of wrap that up. And so make sure that you submit that information for the flyers. But thanks so much for tuning in to us each and every day. We love having you on. We hope this is helping you take your trading to the next level. Continue to plug in. Make sure your teams are plugged in as well. And with that, we'll go ahead and play some music and wrap up today's call. But have a fantastic day.